And the crypto and assets is really to educate you guys from really three sides of analysis. Number one, the fundamentals, which is really about the events and the things that are actually happening outside of the charts that influence the markets. And then the technicals, number two, which is obviously looking at the charts, looking into certain price levels that you guys can look to invest or maybe even trading opportunities. And then the third side of it is the sentimental analysis, right? And that's kind of like the feeling of the market and where things are at. And if you guys have been paying attention to the crypto markets or the news, you'll understand that yesterday was a very, very pivotal day. In fact, history was made yesterday in the crypto markets. Maybe you looked at your portfolio and thought, what on earth is going on? Like, where's all my money gone? But this is the good thing about the crypto markets. It's volatile, and volatility is opportunity. So we're going to start off this call as we usually start off this call, and that's going to be with diving into the weekly news. So I'm going to go ahead and share my screen, and we're going to dive into that and then speak a little bit about what happened yesterday because I know it was pretty crazy. So let me go ahead and present, and we'll get things kicked off. So the first thing is Morgan Stanley, one of the world's largest banks. You have Morgan Stanley, you got Bank of America, you got various banking companies out there, and so they basically opened a crypto fund to all wealth clients. And so previously it was only for high net worth clients, and so as we know, many banks obviously they're centralized, and so they're, shall we say, fearful of crypto, but not really fearful of crypto and the technology, but they're more fearful of losing investors. They're more fearful of losing their high net worth individuals who then take the money out of the banks and then put it into alternative assets like crypto, because the less money that is deposited at those banks, the less profits that they can make, the less money that they have to trade with in the markets, the less money that they can have in reserves at the bank. And so I remember in 2022, I believe, when I'm banking with NatWest in the UK, and I basically tried to make a transaction from NatWest to Kraken, which is another centralized exchange. It's basically one of my favorite ones. And so NatWest called me when they saw me trying to make that transaction and said, "Hey, this is a high risk play. This is like we see a lot of scams in the crypto space. We're not going to let you make this transaction from our bank to Kraken." That was in 2022. Like they actually didn't let me move my own money. And I was literally blown away. I was like, I own it. But they were like, no, like we're not allowing this to happen. Clients can't do this. And so maybe now, 3 years later, 2025, things have changed. Banks are a little bit more lenient. But back then, that was the kind of perspective. And so, yeah, so this is positive news because this just means more adoption. When you increase the accessibility of crypto to more people, going from high net worth individuals only, which is basically people who have $1 million plus in net worth, to all wealth clients. And I'm not sure how they define wealth clients. I want to say it's something like having above 100K in an account, something like that. But that means more and more people can actually invest in crypto through the bank, which is great. And so the second news is the largest single day liquidation in history occurred in the past 24 hours. And this is what I mean about, you guys probably saw or heard about this yesterday. This was massive. In fact, $18.1 billion was liquidated in the past 24 hours. And we know that the market cap of crypto was around 4.2 trillion. And it went down by, it was like $600 to $700 billion within those 24 hours. And so, yeah, that was a massive event. In fact, for those of you who remember when FTX collapsed, which was back in 2022, guys, we thought that was a big liquidation day. And actually, $1.2 billion was liquidated in 24 hours. For those of you who remember Luna, the crypto that collapsed, Luna, that was a huge day, but that was nothing to the size of the 18.1 billion that was liquidated from the markets yesterday. And then the other event, which was COVID. We know COVID was a massive time for the markets where there was big retracement. Well, guess what? Only 1.6 billion was liquidated in 24 hours during the COVID period. 18.1 billion, guys, happened yesterday, which is just an absurd number. And we're going to dive more into it. But the whole real premise of why that happened is because Trump announced tariffs on China imports. Anything that China is exporting and bringing into the United States, Trump is saying, I'm putting a 100% tax on top of that. And actually, that's a key distinction. It's not a 100% tariff from, let's say, we're importing Chinese like silverware. If Chinese silverware was 20% tariffed already, he's saying on a 100% on top of the 20%. That's what a lot of people don't realize. It's actually on top of what the tariff already is for that Chinese imported product. So it's absolutely huge. And obviously, that news there just caused the market to crash down massively. And so that's a big deal. Massive opportunities to then reinvest in the market, and dollar cost average, which is DCA, which basically means if you hold a position in Chainlink already, if you hold a position in Filecoin, if you hold a position in, Polkadot, for example, dollar cost averaging is basically investing into that asset as price drops down lower. So you're not trying to catch a falling knife, but you're basically lowering the average price that you got in that crypto because it's dropping in price, which is a great strategy and concept that we utilize here in Powerhouse to lower your average price, which basically means your ROI is going to be higher over time. And so we'll dive into things more, but they say October is Uptober. And we mentioned this last week because typically in October, what we see in Q4 in general is that we see bullish markets. We see crypto, Bitcoin being in the greens from year on year on year, looking at the past 5 to 10 years of history. So that's still very, very possible. It's just that remember that the markets need to take the most amount of money from the most amount of people. And so these liquidation events are requirements really by law to occur at some point. But that doesn't mean that we can't have a bullish October. I just want you to know that. In fact, the longer this period of drop happens, the bigger the rally. Put a 5 in the chat if you guys understand that. Like the longer and deeper the retracement, the bigger the potential rally and ROI that you guys can see in your investments. And that's honestly a good thing. So the last point here is that Trump is considering a $1,000 to $2,000 stimulus check from the tariff revenue. What does that do? When citizens get stimulus checks or when money is injected into the economy, like the Biden administration did after COVID, guys, number one, that is an injection of money into the economy. That stimulates economic growth. That's something that will raise GDP, which basically raises the country's economic growth. That gives more money to people in their pockets to do what? To consume products, to buy services, but also to reinvest into the markets. And what markets will they typically reinvest in? When times are tough, when people's risk appetite is higher, where are they going to go? They may not go to stocks, or they may not go to traditional. They might go into crypto because this is extra free capital that they're willing to risk on. So we saw this back when Biden gave out stimulus checks and what happened to crypto. In fact, I think the first stimulus check was March 2022. And if you go to TradingView and you look at March 2022 and you look at the appreciation in crypto in terms of market cap and Bitcoin as well, it's basically undeniable what happened. So these are actually bullish news events that are happening within the market that I wanted to touch on. And so this is the weekly news, what's going on with crypto. Me and Gil are going to go back and forth for the charts, look at some projects that you guys can look to invest in. So Gil, I'm going to pass it over to you, brother. And let's dive into some of the things that we can look at chart-wise.
Yes, sir. Yes, sir. Guys, put some ones in the chat for John Luke, honestly, coming in here and always providing the information to when it comes to the news, right? I think it's very exciting times with everything. I know some people are informed, some people are not, but obviously you guys plugged in with the community and everything. We're more informed than the average person. You know, I know we had a call yesterday, like a last minute thing, but one thing that we talked about is that most people right now are not looking at what's going on, right? Like most people are living lives. You know, I was just at a coffee shop and people just chilling, you know, people just doing their thing. Like really a lot of people aren't really understanding of what's going on or even if it matters. And the reality is that that's the whole purpose, right? That's the whole purpose of this is that, you know, and that's something I said yesterday is that the fact that most people don't have the eyes on what just happened, which if you guys didn't know, it is the number one
worst day in crypto in history was yesterday. Like you're talking about the whole market has ever existed in crypto is the worst day ever when it comes to downturn. And people are not even looking at it. Now that is a very good sign for us, for the people who are ahead, and who are informed. And the biggest reason why is because that shows that there's still opportunity, right? That is the biggest thing for us to kind of look at and understand. And also understanding that there's still going to be things behind closed doors that might be shown later. And we'll talk about that as well. But the first thing I kind of wanted to come down and show you guys with, I know we have a lot of people who will have time here. Like put a 5 in the chat if you've been on Crypto Saturdays before. You know, you're a seasoned veteran here. You're on here every single Saturday. Put a 4 in the chat if you're new. Put a 5 if you've been on these sessions. Put a 4 in the chat if you're new. Just to get a good gauge. I know a lot of people mostly are like people that just come every single Saturday, which I love it. But if you're new, welcome in. But we have a lot of experienced individuals. So the first thing we always look at, okay, and it's something I want you guys to like put a part of your plan when you look at the markets, when you look at certain things in crypto. The first thing you always want to look at, in my opinion, is CoinGecko. This is a great place, a great use tool where you can see everything that's going on and understand just how to navigate in this space, right? So CoinGecko is a great place. One thing I want to kind of highlight here in these times is that there's a section here up here that shows market cap. Okay, this shows all of crypto, right? And we can show a trading view chart here in a little bit, but it shows kind of what's happening. As you can see, we're down, 5.9. I think that's out of today. I don't think that includes yesterday. But even if you show like the last 7 days, right, you can see that we were at $4.3 trillion and now under $4 trillion. So this is kind of like a good kind of gauge to look at. There's a lot of cool gadgets and tools you can actually use here as well. But this is kind of a great start for you. Now, the second thing I always like to look at, and a lot of people don't actually, is I go into the total chart here on TradingView. Now, there's a couple of things I want to go through, and then I'll give it to Jean-Luc if he wants to add anything, and we'll just go back and forth. But before we kind of go into more specifically, more in depth, I know Jean-Luc already talked about what happened, and we'll go a little bit more depth. We might go in a little rabbit hole real quick. We'll see. But I wanted to show this, okay? One thing I like to do in crypto is look at the past as a learning lesson, right? It's kind of like in life. You don't want to look at the past and regret it or be like, damn, I wish I would have done this, or dang it, these times were tough, right? You want to look at it and say, okay, what happened before and how does it compare to now? That is one of the biggest things I like to do in the markets because it's just how it works. History repeats itself. It doesn't do the same exact thing, but it does rhyme. So one thing I was doing actually before this session, I wanted to kind of see where are we now compared to where we were at in the last run. Now, another thing I will say is this. Not every run will be the same. In this run, I think is the most unique run. And the biggest reason why is because now we have institutions. Okay. In the last run, we didn't really have that much institutions. It was more retail. But today we have way more institutions than we have retail, meaning the market might move a little bit different than what we used to, and it might stretch longer. The bull season could stretch longer. The bear season could actually minimize. There's a lot of factors that can show that. I'm not saying there's going to be no downturn. There is going to be downturn, but it's going to be a little bit different because when institutions are in play, they don't like to see these crazy drops, right? And now that we have ETFs, it's something that we want to kind of look at and understand, okay? But what I wanted to show is this, right? In the last bull run, so let's go look at the weekly and the total market cap here on TradingView. I want to show you guys this, okay? What was the last time where we broke all-time highs and we were above previous highs, right? So this is 2021. I'm going to put this here for you guys, just give you guys perspective. And I'm looking at this with you guys. I'm going to show you guys like what I look at and like kind of what it could happen and bring, right? From after what just happened. So the last time we were in this kind of area, which was above previous highs, which is similar to where we're at now, okay, was 2021 compared to 2018, right? So this was literally the holiday season, December going to January, which I think are very bullish months in crypto, or the holiday season, believe it or not. I think there's a lot of factors with it. I think the biggest one is that most people are distracted, institutions are locked in, and also understanding that sometimes big corporations and institutions now more than ever, they either want to close the books by investing or start the books by investing. I think that's a big factor as well. We're honestly going to see that this year because it's the first year that we have institutions in as much as they are with the timing that they're going to be in, which is end of the year going into the new year as well, right? But I wanted to show this because during this time, and let's even go to the daily, okay? During this time, right, we were above all-time highs. And it's interesting because during this time, there was a downturn of 28%, right? Literally in even this day right here, January 20th. Yeah. January 10th to 11th. In one day, back in this time, we saw a downturn of 28% at the similar timing of broke of all-time highs. Now, what happened after this is that this market actually created the real almost all-time highs because the last run we had like 2 waves. Okay, we'll see what we'll see in this one. But it created the start, in my opinion, of the true bull run. Put a 1 in the chat if this makes sense. All right, I just want to show this. Look at the past, because that's how you study the markets. You look at what happens, and you see what's going on now. Put a 1 in the chat if this is making sense. Okay, hopefully it's making sense. Right? It's not crazy complicated. Just looking at candles and looking at percentages. Okay. Now, what is going on now? Let's go back to the week. Right now, we are above all-time highs compared to last run. Right? I have this line right here. It shows all-time highs. And we're right above. And what happened yesterday, which is really wild to me, it's 24% decrease. The same decrease that we had here. Now, Gil, actually, this might have been even a bigger one. Now, Gil, why is that then? Like, why is it the fact that yesterday was the most liquidations ever, but it wasn't the most downturn ever? Well, there's a lot of factors. And what got most affected yesterday was actually the altcoins. It wasn't really Bitcoin. It wasn't really Ethereum. It was more of the altcoins that got the most affected that saw 50%, 60% decreases and already are jumping above it as well. So it's a very interesting to see that and say, okay, well, that's interesting, right? Because most of the time you see the most with the bigger ones and then other ones follow. But in this one, what really created that liquidation and brought things down was that. But also this, another factor is this. I'll put it down here. People were expecting bullishness. Put a 7 in the chat if you can agree to that. Is that people, before this happening, were only expecting bullishness. Nobody was expecting a downturn. Like, literally nobody was. Like, literally. Everybody was like, yeah, we're good. Rate cuts are coming, right? So that also creates a lot of things because what happens is this. When people get liquidated, that means they were also in trades on exchanges. They were in buys, literally buys in the exchanges for trading. And what happened? Their stop losses hit. And if you guys know this in smart money, this is what we look for. So the biggest reason why it was the biggest losses in crypto, it wasn't just because the decrease of it. It was more of the sentiment was so bullish that downturn really took people out of whack. That's literally what biggest, in my opinion, took that to a turn. So now I want to explain what I see now, okay? With this downturn, right, and with having interest rates looking to get cut again at the end of the month, I'm going to put interest, or rate cuts, not interest, rate cuts happening at the end of the month, I can really understand that this move that happened, and if you look at it on the daily time frame, all it did, guys, all it did, fam, was it took liquidity. Put a 9 in the chat if you can see this right now. Put some 9 in the chat if you can see this right now. Literally the liquidity that it took, very obviously, and if you don't know this, then definitely recommend to start studying smart money, even if you're just portfolio building, or tape reading, what we call it now, right? But this is a perfect example of liquidity being built up and being brought out, and all these people being taken out to a potential upside. All right. I know John Luke wants to add something, so I'll let you add some things, bro.
Yeah, bro. No, I completely agree. And if you go to the weekly and go back to 2020, 2021 times when you were showing earlier, a couple of things that were quite interesting. So for those of you who trade smart money, I'm sure you're aware of the different phases that the market moves in terms of accumulation, distribution, and reaccumulation. And so um, there were three rounds of stimulus checks that occurred, right? The first round of stimulus check that happened was March 2020. And if we go to March 2020, you'll see what happened to the market after that. That was when an injection of money went into the market. The second round was December 2020. And then when we go to December 2020, you guys are going to see something as well, which occurs there. So that was March. And then December 2020, just put like a vertical line or something there. That'd be cool. Yeah. And the third one was March 2021. Now, looking at these 3 points, put in the chat, what do you guys notice about looking at these areas? March 2020, December 2020, March 2021. There's something common that happens to the market afterwards. What do we think in the chat? What do we notice about price after these areas? It's bullish moves, significantly bullish moves. Now, this is interesting because even though the stimulus check that Trump is considering hasn't happened yet, what happens when it does happen? Well, the past three times, as Gil said, the markets don't repeat themselves, but they do rhyme. Massive bullish momentum. Now, that's the first thing that was interesting to me. The other thing that I found interesting was the fact that the fear and greed index, which is basically the sentiment, the emotions of traders and investors, yeah, we weren't in fear before Friday. Like we weren't in like fear at all. What we see greed. Look at the days before, greed. And I reckon if we went for like the past 30 days or so in terms of perspective, um, it may have been a mixture as we can see. We see neutral, we see greed. But long story short, there's more greed and neutral than there is fear. So what does that mean? That means that the long to short ratio was very positive. Now, what's a long to short ratio? A long to short ratio is simply the percentage of people who have longs, which are buys, compared to the percentage of people who have sells, which are shorts in the market. Now, prior to yesterday, where the markets went, 19.1 billion, $18.1 billion were liquidated. That means stop loss were hit, guys. Most people had longs. The percentage, it was a high ratio of long to short. That means that people were not expecting the market to crash whatsoever. And you can potentially put that down to, you can maybe say Black Swan event, but not necessarily. It was more of a case of no one expected what to happen yesterday to happen. And we know that because there was a high ratio of people doing buys and not many people were doing sells or shorts. And so I found that interesting because these things that occur, it happens when people least expect it, when they're least prepared for it. That's why so many long positions were liquidated because not many people were in a fear mindset because Bitcoin's just rallying on rallying on rallying. And then the third thing I wanted to mention is that Gil mentioned about how altcoins really took the biggest hit. Now, a key word was mentioned earlier, which was institutions. There's more institutional money in 2025 than there was in 2023, 2021, 2019. That means that there's more big money involved in the market. And that also means that the cycle compared to the previous bull cycles is going to be slightly different. We're not going to see these massive high ROIs on Bitcoin, Ethereum, and these layer one project guys as we did in the previous cycles. Because there's big money, there's BlackRocks, there's Fidelities, there's Chase, there's MicroStrategy, there's these large corporations that have big positions in Bitcoin. Do they want to see negative $200 billion on their positions? No. But guess what? If they are to liquidate people from the market, it's going to be with the altcoins. It's going to be with the layer twos and the threes because they're not invested in those projects. That's how they're going to drop the market down. So put a 10 in the chat if that's making sense. I just wanted to break down those 3 points because I think it's important to know that, yeah, this cycle is slightly different. And the people who are going to get wrecked are going to be the people with most of their portfolio in the smaller projects.
Yeah, exactly. I think that happy you brought that up, bro, honestly, with the stimulus check, because that's another good example of looking at the past and looking what happens to potentially what's going on. And like Jean-Luc was saying, and he talked about it when it comes to the news of everything, it's interesting to me, very interesting. It's just wild because let's do this. Let's do a quick deep dive, right? When was it that Trump, and I'm gonna share my screen now. When was it that Trump talked about stimulus? Okay. So let's put here. Let's put potential. Okay. And it's interesting because before all of this happened, like Jean-Luc was saying, right? We were very at greed. And as we saw this. And it's interesting because around October 3rd was the time where Trump said he was considering a new stimulus check. Okay, and there's been talks about this before, but he was now talking about this now, and he was saying that it was going to be funded from the tariffs collected, right? Well, isn't it interesting that October 3rd was the top of this right here? And a couple days later, we had this happen. Now, there's one thing that me and Jean-Luc have learned a lot, and if you're within the community in Powerhouse and Zinrai, you understand this because we have educators talk about this all the time. Everything you see in the headlines is made for people to make a decision. It's made for people to have incentive. We're not going to go too much in the rabbit hole. Maybe we talk about another session, like maybe we talk more about that. But just knowing and look at history, you don't have to take our eye for it or Jean-Luc's eye for it. You don't take any of our eye for it. Go look for yourself. Go look at times that the news were super bearish. We're telling, crypto is dead or investments are dead or SPX is dead or whatever is dead. And look what actually came out of it. I believe I have a theory that if you look at that, every single time the opposite happens after. Literally every single time. And every single time there's a negative news, that's the bottom. Every single time there's a top exciting news, buy crypto. When the news starts to show how to buy crypto, which happened back in 2021, that is a top indicator. Now, this is the opposite of what we're taught. Is the opposite of what we thought growing up because we thought the news was there to give us information to help us. But I'm not saying it's not there to help you, but it's there to give you a vision of what they want you to see. Put a 5 in the chat if this makes sense, right? And honestly, a stimulus check would be one of the most perfect timing things, more than ever, happening at the end of this year or going into next year. Because one thing that we do need, and I love that this happens, is because there's two things that I think are going to be in our favor, and it's going to create a lot of bullishness. The first thing are rate cuts, which is already happening. Okay. And the second thing is money printing, meaning stimulus. Now, is this good for the country long term? No, it's not. It's actually killing the country. The more stimulus check we have, the more printing we have, it's going to kill the country. I mean, just being honest, it's just how it is. It's just economics. If you want to study that, go ahead. But at the same time, we can't control that. Number one. Number two is you would rather be on the right side of it, right? And something I really speak about, and I'll just touch on it, is a lot of people believe, that, gold, for example, this is an off topic, but it's not at the same time, that gold is just becoming more valuable. Gold just hit $4,000. Now, is it that gold is becoming more valuable, or is it that the dollar is actually dying, basically? Is the dollar losing buying power? Well, it's actually the fact that the dollar is losing buying power. Because remember, everything right now is being compared to the dollar. Gold is being compared to the dollar. Bitcoin, is being compared to the dollar. And that's why we have certain biases with Bitcoin, is because we understand that, in example, specifically Bitcoin, there's only going to be 21 million. So if the dollar's buying power continues to go down, automatically things that have a limited supply and have value that people see in, which is like gold, silver, Bitcoin, right? Certain assets is naturally going to rise. Naturally. Because that's just how it works. I know it might go over your head, it might make sense, but I like to break that down because it's a different terminology of way of looking at it. It's not the fact that it's becoming more valuable, is that what it's compared to, it's sustaining more value than what it's being compared to, which is the dollar. Okay, so hopefully that kind of makes sense of everything when it comes to that. Now, what we can do, and me and John can piggyback on it to end this session, is all right, Gil, like what is the opportunities that can lie, right? You know, from our point of view, there's a lot of opportunities that can lie. There's a lot of things that are going on, a lot of, you know, projects that you can be involved with. But I really want to let you guys know this, is that you want to put yourself in a position where you understand what you're investing in. That is the most important thing. Many times I have seen people, and me and Jean-Luc have seen it and done it ourselves, that we invest in something just because we hear about it, just because somebody said it, just because we talk about it, right? But the biggest thing you want to do is understand what you're investing yourself. Okay. So for example, let's talk about Chainlink. I'm just giving you guys examples, right? To give you a point of view, and then I'll have John touch in as well. Is here on CoinGecko, there's a lot of things you can do to research, right? I use CoinGecko a lot. You can go in, you can look at the website, you can Google it, you can figure it out. Obviously, the educators talk about all these tokens as well on a very conscious basis. But you can also come on here and read this, right? You can read what Chainlink is really doing. You can see that who they're partnering with, right? Every single month, in my opinion, they're just partnering with bigger players. They actually have a whole thing with the US government at this point, and they're really providing a lot of data for big institutions. Fidelity, JP Morgan, Central Bank of Brazil, MasterCard, Swift, UBS. Like, these are big institutions, right? That they're actually going to be providing and helping when it comes to Oracle solutions, right? When it's basically data, okay? So understanding this is important. But my question is, you know how many people are invested in Chainlink and don't know this? And I'm not saying you have to be like a geek about it and know every single price point or every single thing about it. But what I am saying is, once you understand these things, it gives you, as the investor, more confident in the market, more confident in what you're in, and less asking questions and more making decisions. Because a lot of people ask, well, Bill, Chainlink, good investment. Well, where can it go to? Right? What can it do? Is it a good price now? Obviously, we're looking at good prices, but when these markets start to go up, most people are going to ask, when should I take profit? That's going to be most of people's questions. And there's a lot of factors on it, right? So let's answer a couple questions, I know, because I kind of want to, I think it'll be good to ask those questions, answer those questions. But don't go, is there anything you want to add to that?
Yeah, no, I'd say I'm looking at different projects. Not with Link specifically, but if you go to Jupiter, out of all of the projects that I have on my watch list that I'm looking at, Jupiter literally did a 3x in less than 24 hours. Like, it went down to 0.1 and now it's at 0.33. That is wild. And I'm not saying you're going to be able to buy, you know, the exact bottom of that, but in terms of positioning or looking to get in the market, it's at a position right now. I'm just looking at it on my screen as well, where like that massive wick all the way down, it's literally market structure wise right at the low from June the 22nd. So for it to drop back below that, possible, maybe, but this could be a good opportunity to invest back into Jupiter. For those of you guys who are interested in that. Now, other ones that I'm looking at Ondo. Ondo's a great project. What they do is actually offer high yield investment with US debt mixed with tokenization. So I like Ondo because of the people that are actually partnered and behind it. Massive, massive, large banks in America. And so in these times, the key thing to understand is what is your risk tolerance? Because this is a good opportunity to rearrange your portfolio if you feel like you're too heavy weighted on smaller projects or too heavy weighted on large projects. And so that's why we definitely preach about having the majority of your portfolio, number one, in projects that you understand the basics of, but also in projects which actually have a utility which makes sense, such as Ondo, such as Jupiter being a DEX, and also providing airdrops to holders who have been holding their projects, 2 or 3 times a year. Looking at projects such as ICP. Now, ICP is a big one that we speak about in Powerhouse. However, you also have to understand that adoption is something which ICP is lacking. There's a level of risk there. Just because something's in the data or AI space and it's a fast growing industry, it does not mean that it's obligated to do crazy ROIs. So keep that in mind as you're looking at these projects to reinvest in, because yeah, these prices are prices that, number one, we might not see again. And if we do, great. But number two is that you don't want to be that individual who says, oh, I have X amount of money to invest. There was a massive wick down. That means it's going to get filled in. So let me not reinvest nothing yet. Let me wait for lower prices, because that's never promised or guaranteed. So there's nothing wrong with X amount of money putting 50% in it now and keeping 50% in spare cash in a stable coin like DAI or USDC. And then if lower prices come, great. You can put the other amount in there. But if they don't come, then no problem. You can dollar cost average at a higher price. It's not the end of the world. But don't be that individual who has the first mentality I mentioned, because that's when you really start regretting your decisions.
Yeah, 100%. I'm happy. I'm happy you definitely brought that up. And I know we have, people asking about ICP, Filecoin, and I'll kind of answer it with this kind of perspective, in my opinion, is number one, every single one of you guys here, I think, need to understand the 3 types of cryptos, right? Through the 3 different categories that exist: main cap, mid cap, low cap. I think that's something that a lot of people don't look at when it comes to understanding. Now, main cap tokens are tokens that have a little bit more of, you can say, I'm not going to say security, I'm just going to say more funding, right? More participation in, right? Because here on market cap, you can see how much it has. So like, for example, Bitcoin has 2.2 trillion, obviously is the biggest one. All of these are like over 100 billion. And then we have some at 10 billion, 9 billion, 8 billion, 6 billion, right? Now, what I like to do, and I'll show you guys this, and I'll put it on here, is on main caps, I section it to 2 categories. I like to call them like tier A or tier 1 and tier 2, because I want to give you guys some knowledge and just my point of view as well. Just because it's a main cap doesn't mean you need to have 50% of that in your portfolio, because we talk about that 50% in main caps, right? Because there's different tiers. ICP, I like ICP. It has amazing technology. It has amazing things to do. But like Jean-Luc was saying, one thing that we're missing is adoption. Okay. And I saw this last run. So did Jean-Luc. Jean-Luc, bro, we don't have to name him, but bro, remember how many projects that we saw with so much amazing potential that ended up doing nothing?
Loads. Yeah, absolutely loads. And Jack, like, I'm happy you mentioned about marketing as well, because that's another thing. Adoption's one, but marketing is two. This is why, I think I put it on the Instagram. This is why there's 5 criterias. There's 5 things that you should tick off before investing in a project. I won't explain all of it, but just to give you guys the brief. Number one, the utility. Number two, the partnerships behind the project. Number three, and when I say partnerships, I'm talking about the businesses that are actually collaborating or financially funding the project. Number three is the competition. What other projects are within that industry or within that category? If you're looking at DEXs, who are you going to compare? Uniswap to Jupiter, like who are the competitors within that. And then number four is the tokenomics. The tokenomics is the numbers behind the project, guys, such as the supply, whether it's unlimited, the total value locked within the project. That's going to show you the liquidity, things of that nature. And then number five is what Jack mentioned, which is community, marketing community. Because if they're not if the R&D team is not doing their job of promoting, you can have the best crypto in the world, guys, the best utility, the lowest fees, the biggest funding partnerships. But if they don't have an online presence, they're going nowhere. Like nothing's going to happen. It's not going to grow. And so this is why number five, in my opinion, is very important because but by the way, you also have projects that have no utility and great communities. So you have both. You have the flip of both. So you have to understand like what is it that you're investing in and what is your purpose of that investment. We've all invested into a meme or a hype or a very low cap coin, and we've done that purely because we know that it's just high risk and it's like a high, like Trump coin. Let's just put like 1% of my portfolio in Trump coin. Let's just see what happens. Like we've all done that. That's okay because you know what you're investing in. You know the purpose of your investment. The purpose of investing in Trump coin is not to hold it for 10 years, maybe. Maybe the purpose is you're trying to get out within 1 month, 2 weeks, like 2 hours. That's okay because you're aware of what you're getting involved in. The issue comes when you're not aware of why you're getting involved in a project. For example, I'm in a project called Bonfida, which is basically an AI focused project on the Solana blockchain. And they recently just like changed the token branding and name to a new one called SNS, Solana Name Service. It's basically what ENS does, Ethereum Name Service for Ethereum, but except for Solana, where you can have your own like URL, you know what I mean? So like, I don't know, like gnatdescene.sol, basically the purpose of what it is. But long story short, it's a very low cap, risky play. But before going into that, I'm aware of that. You know what I mean? So if I do see losses or if I am in 50%, 60% drawdown, that's okay because before even getting involved, I knew what the play was with this. And so that's why it's key to have that understanding because there's the investment concept. When I was in New York, actually, somebody I know basically mentioned this to me. He said, hey, like whenever you're making an investment, you need to be comfortable and aware that if you lose all of that money tomorrow, you're okay with that. Just think about that. So, like, if you're investing, if your most of your portfolio is in Solana, for example, are you okay? Because I don't know if you guys know this, but crypto investing in general is non-investment grade. That's what they say in traditional finance, non-investment grade. It's basically one of the most riskiest investments you can potentially make. That's what they say. Are you okay with losing all of your Solana portfolio next month, next year? So I'm not saying it's going to happen, but I'm just saying like that's like an understanding to have before getting involved. But obviously it's not going to happen with Solana. But that's the perspective I want you guys to keep in mind. And so that's why you'll see high net worth individuals have the majority of their portfolio either in stocks and a percentage of that in crypto, and maybe some of it in real estate or other venture capital. As we're younger, as we can take on more risk and we're way more educated, we know about crypto. Yeah, you can have the majority of it in crypto, a little bit in stocks, and a little bit to the side, ready to deploy into the market when you're ready. So yeah, I just wanted to share a bit of that value.
Facts. No, I think I love that I love that you said that, bro. I think that that perspective is important. And I love that you said this, and I wrote it down here, guys, fam. So y'all can put it on your notes, right? These five things to look at is key. And not all portfolio, not all cryptos are gonna have all of them, but more of what they have. If they have all five, then obviously that's great. But I really think that that's important to understand. Now, I know somebody asked about Filecoin. Filecoin is in the same horizon, in my opinion, as ICP. Has an amazing use case, has amazing things that they're doing, but the question is, who knows about Filecoin? Not many people, which could be good opportunity, right? But it's also understanding, like John Luke is saying, your risk tolerance. Are you understanding and saying, okay, but if Filecoin doesn't do the jump, am I good? Right? And another thing I want to give you guys this, and this is might be one of the last things I'll say, and I'm going to touch on this. I'll come back to this and end it there, and then we'll go from there. But I do want to say this as well, guys, is the markets are going to move in waves still, okay? You're still going to have Bitcoin. You're still going to have Ethereum. Ethereum hasn't even broke all-time highs. That means we have so much more potential. You're going to have Solana. I think at the same time, you're going to have Chainlink because Chainlink is now a bigger asset, in my opinion. So you're going to have these two maybe at the same time. And then you're going to start to have the smaller altcoins. Yes, obviously, they might be at a higher price. But my point of view is this. It is better. Remember in trading how you look for breakup structures as confirmation? Put a 5 in the chat. You use that as a confirmation. Like it comes to my entry, but on a smaller time frame, I look for a breakup structure to just confirm the move. It's the same thing I see for the lower coins in crypto. Now, if ICP, give you guys a perspective, because I'm investing in ICP, but not heavy. But if this happens, that might change. If ICP starts to create this, I might get reinvested. Creates this, and I still see upside, and now they're doing marketing, and now they're doing their thing. Maybe I get a little bit more. And then I start to see, okay, can this really do the thing that I think it can do? Right? But if you put all your marbles, and there's nothing wrong with it, it just, like John was saying, your risk tolerance, everybody is different. But if you put all your marbles here, and this does this, then my question is, are you okay with that? Knowing that things like Chainlink maybe did this. And that will happen. I'm not saying it's going to happen for ICP, but I'm just saying there's going to be tokens that won't do what you think it's going to do. And then there's going to be tokens that do, and you're going to fear that missing out. And you're like, damn, like I thought everything was going to go up. To an extent, yes, but maybe not to the potential that maybe you see. So obviously we'll talk about that throughout the sessions, when things start to go bullish and stuff like that. But I hope this is making sense. Don't say that Gil doesn't like ICP or Filecoin. I'm invested in both. So I don't want to hear any of y'all saying Gil doesn't believe. Nah, I do. But I'm also very conscious because remember, I've been here before. We talked about that, me, Joe, Luke, Tony. There's only a few people that have been here in the last cycle. And we've seen what happens with a lot of these tokens that maybe don't do marketing right. Maybe they shifted like Bonfila. That was an amazing project. But I don't even know what they did. They created a new token. Even Marcus Terrell said, like, they ruined it. They, like, did this and they did that. Like, is it going to see jump? Maybe it does, right? Maybe it sees some jump and cool. But what it could have done would have been way better. I don't know why they did what they did, but we'll see. So it's the same thing of understanding these things and being okay with it and understanding that risk. If you're somebody that maybe doesn't want to do high risk and you're like, hey, Gil, I don't want to risk too much. I kind of want to be, nothing is for sure, but a little bit more smart. Look at the top 10. Right? Look at the top 10 and make that majority of your portfolio. I wouldn't really include Bitcoin really, but I would look at Solana down, even XRP maybe now, but Solana down, like what are the ones that you want to look at, right? And maybe in the top 50, for example, okay? And starting to ask yourself these questions and obviously coming to sessions like this and asking questions, being in the chats and asking questions. But last thing I'll say is this, okay? Last thing I'll say is this before we end the session today. Is you want to ask yourself how much percentage you have in your portfolio, okay? I like to categorize crypto in different categories. Main caps are above 1 billion. So plus 1 billion or at 1 billion. But I have a tier 1 and a tier 2, right? Tier 1 are the cryptos that have more of this. Tier 2 are maybe cryptos that are missing this. Meaning ICP is a main cap, but I would have it under tier 2. Chainlink is a main cap, but I would have it under tier 1. So making sure you're doing that. Same thing with mid-cap tokens. Is any crypto that has a market cap of above 100 million, but below a billion. That's a lot of tokens. Like that's so many. And most people think, well, that's why I should have 30%, 40%. Not necessarily. Because we have tier 1s, we have tier 2s, and then I even have tier 3 that I wouldn't even touch, even if it has a good market. So kind of categorizing yourself that way is important. And what I would use is this. Take the knowledge, take the game that Jean-Luc gave here, and go look at your portfolio this weekend. And ask yourself, does it have utility? Does it have partnerships? Does it have competition? What is its tokenomics? And does it have a good community and marketing? And the more it checks off, the better. I'm not saying don't invest in something that only has 3, but the more, the better. Okay, fam? So put a up in the chat if this makes sense. I don't know if John, you want to add anything to it? Oh, you're good. Okay, cool. So I hope you guys learned something on today's session. I know this is something that we just kind of went on. I kind of liked the back and forth. I think that was kind of cool. Something that we just kind of went
Yeah.
in together. But I'm excited. I think next week we'll probably schedule something more like an actual like breakdown of a part of crypto. I know last week I talked about DeFi. Maybe we do DeFi. We'll see. We'll see what we do. But this week we just wanted to go through what's going on because it's important to actually understand the back end, actually understand what's coming. And don't feel FOMO, fam. If you're not crazy invested in crypto, invest what you can and use this season as a learning season. Use this bull run as a learning bull run and create more capital. Here in Powerhouse, we have so many ways you can create more income through trading, through residual income, through here, through there's so many ways. And this is the time to stay locked in. All right. This is the time to be locked in more than ever because this is one of the many runs, but also these times are the times you're going to remember in the next 10, 15, 20 years ahead as well. All right. So I hope you guys have a great day. I'm excited for what's to come, fam. If you guys know, stay plugged in with the comedian Zen Ryan Powerhouse. If you do not know what that is, reach out. Maybe if you're looking at this on YouTube, check the comments, whatever it is, ask questions, and I'll see you guys on next Crypto Saturdays, guys. You guys have a good one and stay blessed. Peace.